Now, for more on today's jobs numbers, we put together a little taking stock think tank. Our guests are Joe McAlinden, fund manager for Catalpa Capital. He's also the former chief investment officer of Morgan Stanley Investment Management. We also have Ann Dowd, a columnist for the Fiscal Times. Ann Dowd, also a certified financial planner and a former president of the Investment Research and Communications Division at Charles Schwab and a former Washington bureau chief, Fortune and Money magazines. We also have, for the search perspective, Jeanne Branthover, managing director of Boyden Global Executive Search, one of the biggest headhunters in the country. Great to have you all with us. And Joe McAlinden, do we get to go yippee a little bit? I mean, 151,000 jobs. It's not fabulous, but it's a lot better than losing jobs.
It's better than losing jobs. And also, you know, the government tallies up these numbers and puts them out in a hurry. And most of what they put out, whether it's jobs or retail sales, these are all estimates based on fairly small samples. So you get huge revisions in the subsequent couple of months. When you look at the revisions, today we got the October number. When you look at the revisions of September and August, as of right now, there were 270,000 more jobs created in the last 3 months than we thought at 8:29 this morning. So you had the big headline number, but with the revisions, it was even bigger. And so there is momentum in the economy, which raises a lot of questions in my mind about the timing of QE2 and what it's all going to mean.
All right, we're going to talk a little bit about what Federal Reserve Chief Ben Bernanke is trying to do with quantitative easing, pumping money into the economy. But Jeanne Branthover, I want to bring you into the conversation. Joe McAlinden talking about how there seems to be more jobs being created than people believe. Is risk a new word that is being bandied about in the job market? People are willing to take a risk and actually hire someone?
Well, the good news is the numbers are better and people are definitely hiring, which we've been saying now for a couple of months. So the answer is yes. The companies are still cautious, but I think with these numbers, we're really going to see the doors open up more and more and more. As I said, in the last 2 months, we are unbelievably busier. In the last few days, we are unbelievably busier. So there's no doubt in my mind that risk, although companies, people, the world has been very nervous about moving forward, really making decisions about spending money on human capital, it's happening. And the reality is they're strategizing for 2011, and now they're going to hire in 2011.
And Dowd, does good news beget more good news? If employers see these trends, do they then feel they've got to jump on the bandwagon and start hiring workers because the economy might be a little stronger than they perceive?
Right. Well, you know what? We've seen a boost in temporary hiring up to now, but a lot of employers are just on the edge. Earlier in the year, around April, there were people that were about to pull the trigger, and then the European crisis hit, and they pulled back. And I think what they're seeing now, you're seeing now in the market for employees is more confidence among corporate hires. On the other hand, they still are a lot of questions coming from Washington and how the Fed's program will work. So we have to see how it rolls out, but a good sign to start.
Joe McAlinden, you hear what Ann Dowd is saying about perhaps some increased confidence. What about from the investor perspective? The stock market didn't seem to rally on this news. They rallied on the news that the Federal Reserve is going to pump $600 billion into the system.
Yeah, well, that's actually the fun part. But, you know, the more strong data that you get, the more some people are going to start thinking that, well, okay, the Fed said it's going to do this, but they could always change their mind if the economy is getting too strong. So the other thing, Pimm, is that, as you know, we've had this monster rally. Stocks have almost doubled since March, measured by the S&P 500, since March of '09. And we've had a lot of momentum in the last few months coming off the double dip recession fears of the summer. So I think today's muted reaction is okay. I think we're going to maybe consolidate here at these levels and then push higher as we get into the first half of next year.
Jeanne Branthover, will that make hiring managers much more confident in making a decision to say, okay, you've got a job?
Absolutely, but I actually think today with the numbers and the fact that they are, showing that there's signs of improvement and really making people and companies feel that things are getting better. They're not getting worse.
There's a trend.
And if that trend continues, I think at 2011 we're going to see the hiring that they were thinking about doing becoming a reality, and even more hires that not just rehires, not replacement hires, not just the new leadership, but truly new openings for people to expand revenue and to increase product.
All right, well, we're going to talk about that. We're also going to go into a little bit of detail about how the job market has changed. Perhaps people becoming entrepreneurs or, in fact, starting their own businesses because they can't rely on big business anymore. Jeanne Branthover, is the jobs market, though, different? I mean, let's say that it does come back with a resurgence in 2011. Are a lot of people just permanently scarred, and they're going to be looking not necessarily for jobs in big corporations, but they want to start their own businesses, or they want to do something entrepreneurial?
I don't know if people are scarred, but people are definitely thinking differently. They're thinking differently about their jobs. They're thinking differently about how their jobs fit into their life. They're thinking differently about how much money they can realistically make. And they're thinking about how hard do I want to work to make it. So that's making people think about just life in general and jobs. And they do not trust necessarily, like they used to, the big companies. Look what happened with Lehman. People lost their money. People lost their savings. They trusted the money that they kept in the company was going to pay for their kids' college, and it didn't happen. So we're seeing people from very large firms start their own companies. Entrepreneurs are really coming out of this, and people in middle management are following their mentor or someone that they really trusted that opened up their own firm and are now jumping ship from the big firms. So we're seeing a lot of change, a lot of attitude change as far as what people used to believe in, as far as what the kind of company they should have been with, to totally a different size, a different shape, and a different value as far as who they want to work for.
And Dowd, what kinds of jobs are being created? Are these high-level, high-quality jobs? Because if we take a look, for example, at some of the data, it shows that many of the jobs are in the food and beverage service industry. I mean, you're talking about jobs that aren't necessarily going to be shipped overseas.
Right, you're seeing job creation both at the low end and the high end. Food service workers and security guards at the low end. On the other hand, at the high end is where the real growth is. Knowledge workers, people who need very high skill sets in the computer services and financials, areas that are going to require a very high level of education going forward, because those jobs can be had now in India or in China. They're not just in America. So people really have to change their headset about where the competition is coming from and prepare themselves for that, both in terms of their skill sets for getting a job, but also in terms of their finances, so that they are flexible and can weather some of these storms, which seem to be inevitable in this job market.
Joe McAlinden, is it possible to tease out any investment themes from looking at the jobs data? I know we always describe it as being a lagging indicator, but is it possible that we'll be able to get a hint of what types of industries are going to continue to do well?
Well, when you look at the average hours worked, which is a compilation of the number of people working and how long they're working in a typical week, those numbers have turned up nicely and have been rising for the last 4 months.
As have been productivity numbers.
As have been productivity. So that suggests that both industrial production and profits are going to do fairly well over the next several quarters. In that context, there would be, many of the groups we've been talking about for the last 18 months that are going to continue to do well. The basic materials, the industrials.
Consumer discretionary stocks? Consumer
discretionary, I still like. I was listening to the story on Kraft before. We're very cautious on staples for a whole host of reasons, and primarily the surging commodity prices. But from a macro point of view on this thing that we were talking about before about the jobs, people who start new businesses don't like a lot of regulations. They don't like paying higher taxes, and they don't like tight money. With this election, presumably, all three of those, and with QE2, all three of those have turned into green lights. And so new business formation, I think, is going to surge next year, and it's for the policymakers from the White House to the Fed to the Congress to mess it up. Everything's in place to have a pretty good year, in my opinion.
Jeanne Branthover, can you talk to it, but specifically as it relates to the financial services industry, because that seems to be undergoing a revolution of sorts, not only for large corporations, but for those that might be looking to start their own business, to take their skills and create their own boutique investment firm.
Well, it's just what Joe was saying. Clearly, in financial services, no different than other industries, there are products that are being made. There are innovative ideas that are happening. There are hedge funds opening up. People are looking at the green light is right there. They feel strongly that there's opportunity, there's cash, and cash to be spent by investors, that people are going to start using that cash and finally saying, okay, I don't want to keep it just under my bed. I want to start really investing it. So very smart entrepreneurs are coming up, and they're really looking at 2011 is saying, look, I can really do this. I can really succeed at this. I don't want to be held back by a big corporation that is really only going to take me so far. But this is the time to be an entrepreneur, and I really think you're going to see it explode.
And Dowd, confidence is a term that you use to describe some of the job market. How much of the confidence do you think is personal versus the confidence that might be corporate? Because if you're going to go out on your own, you have to really believe in yourself.
Well, I think part of it is personal. Obviously, you have to believe in yourself. But part of it is the environment that's been created, in part by the government. Now, we've had an election that's put some of the uncertainty to rest. At least we think there's a good chance of the tax cuts from 2001 and 2003 being extended. I think there is an environment that's more pro-business. So,
unfortunately, we've got to leave it there. And Dowd, coming to us from Fiscal Times, Jeanne Branthover, Joe McAlinden, thank you.